Unless they can reverse that, I will be holding on to my gold, silver, and miners.
Welcome back to Metals and Miners. I'm your host, Gary Bohm. Today, we're digging deep into the precious metals and miners with Eric Yeung. Eric is a sharp, data-driven analyst whose on-the-ground perspective from Hong Kong adds real value to precious metals discussions, especially on Asian physical demand flows and geopolitics that many Western voices miss. Eric, it's always an honor to have you back on Metals and Miners. Welcome to the show, my friend.
Well, thank you very much for inviting me back, Gary. It's my pleasure.
Absolutely. All right, Eric, you've been sharing key information in the precious metals and mining space for years, helping the global population to be on the right side of the cycle and to maximize the opportunity. What do you hope for those tuning into our conversation today that they will walk away with after listening to it?
Well, I hope people, after listening to our conversation, will realize that investing in gold and silver is not a short-term trade. It's something that you do to protect yourself and your family for the long term, especially in the current environment where governments around the world are debasing their currency.
Yeah, yeah, exactly. All right. Let's begin with what happened in the markets and the precious metals on this past Friday. Today is Monday. What is your take on what happened, why the markets plunged so hard, and why sentiment just dropped out of the floor?
Well, Gary, it can be a number of things. Earlier in back in April, when the U.S. war with Iran was heating up, I predicted that a lot of these, oil producing countries, primarily the GCC countries. So these are the Saudi Arabia, uh,
UAE, Bahrain, Qatar.
UAE, yeah, Qatar, Kuwait, right? All these countries that are getting disrupted, like their oil production and transportation disrupted, therefore their revenue being disrupted. They might have to sell some of their gold or lease it out to gain access to US dollars. And also they're selling the US treasuries. So we actually saw that in PIC data, that these countries sold a lot of the US treasuries in March. And I also predicted that, countries such as Japan may have to do something similar because they have to, of course, get US dollars to buy whatever marginal oil that is out there that they can still get their hands on. On top of that, they have to defend their currency, the yen. So I said all that, and I think during this entire time, gold has been trading within the range. Like, I mean, you can call it kind of like a descending wedge, but essentially it's a range between 4,200 US dollars per troy ounce to 4,900 US dollars per troy ounce, in that range. And now we are approaching again the bottom of that range. So I think that is still in play. Okay, Gary. But something like you said, the bottom kind of dropped on Friday, and that might be because the market is looking at this conflict in the Middle East prolonging indefinitely. So at least on the surface, that's what I'm seeing.
Okay. Eric, many analysts believe that we were headed for like a global calamity after the closure of the Strait of Hormuz months ago. So far, that's been largely avoided, despite the obvious pain that has been inflicted from the closure. What's your take on that in terms of why has the world economy largely avoided a global calamity? And do you expect that if the strait does remain closed, there's going to be some type of global reckoning coming, or is that now just completely off the table? Has the world adapted to this?
Okay, well, um, interesting fact that you may or may not know, and your audience may or may not know, is that during this time of the conflict in the Middle East, US fighting Iran, Iran fighting Israel, vice versa. Um, China actually decreased its crude oil imports by 5 million barrels per day. So that's significant. So there might be like a reduction of oil coming out. Well, it's not might. There is a huge reduction of oil coming out from the Middle East through the Strait of Hormuz. But China is actively decreasing its oil imports, and if you look at it just at the surface, a lot of people who don't understand China may say, "Well, China have a lot of reserves, so now they're just decreasing imports because they're burning through the reserves, like crude oil reserves that they accumulated during the first year of the Trump administration, and of course when Biden was president." But I have a different take on it because my understanding of the Chinese government is that if there's a real crisis, as you have said, as a lot of experts have predicted, since this war started, and it so far hasn't materialized, right? They predicted that there's going to be a crude oil shortage calamity. If that is the case, I just really don't think China would decrease its crude oil import volume. It's every country for itself. So my interpretation of that is that China's energy strategy of relying heavily on its domestic thermal coal production and its electric grid, which uses primarily over 50%, is domestic thermal coal production, by the way. Combine all that with the fact that China now has a very successful EV rollout, like electric vehicles. Okay. By the way, over 50% of new cars being sold in China right now are EV. So combine all that, I think China, is showing people with its actions that it has successfully, at least for now, pivoted away from, its heavy reliance, on like, from the crude oil imports.
Yeah. So, okay. So, and I'm glad you brought up that 5 million barrel drop because I was actually going to bring that up to you. In addition to that, the US exports have risen dramatically. Venezuelan exports have risen dramatically. And there's been demand destruction on top of all of that. So that seems to have brought some equilibrium, obviously at a much higher price point, but it's brought some equilibrium. But specifically to your point about China, the US and China seem to be playing nice in the sandbox here. They had their big meeting in China a few weeks back. On both sides, there was positive, um, we'll call it positive news that came out. But to your point of the 5 million less barrels per day, if China wanted to really dig the screws into the United States during this time of war and rising oil prices and, hurting the American economy and consumer, they could have kept importing the same level and oil prices would have dramatically shot higher. The stock market would have, plunged. So I guess the question is are we moving maybe towards a greater peace between the two nations, at least for the short term, which could bring a peace dividend to the markets? What's your read of that situation?
That's a very good observation, Gary. As a matter of fact, I can add on that. I mean, in terms of like peace, I don't know, maybe a temporary partnership of convenience,
That's a good
if
word.
we can
Yeah, that's a
call it
good word.
that, right? But like what I'll tell your audience is this. In Q1 of and also Q2 is not over yet, of course. Um, but Q1 and Q2 of 2026, China's liquidity, okay, in terms of like RMB liquidity that the Chinese government released has substantially dropped. Now, my interpretation of that is exactly what you just pointed out. I think the Chinese government knows that if it's doing a lot of reverse repo, pumping out a lot of currency within the country, what's going to happen is a lot of these entities are going to start hoarding fuel. They're going to start buying whatever oil that is available um, at the margin internationally. Therefore, it will make the situation worse. It will make the tightness or the what we see, like, we're not seeing that, but like if China released a lot of liquidity during this time, it will just make that situation a lot worse. And whatever marginal oil that is available out there would be bought up by people who have access to that liquidity. So I think, in a way, China, like as you said, China coordinated with the US in that regard by tightening its liquidity. Now, that also has direct effect on what? On the prices of gold and silver, as we see now. As a matter of fact, Gary, I looked at gold and silver price action versus the mainland Chinese liquidity over the last 2 years, and it almost matched 100%.
That's a Michael
So every
Howell.
time,
Michael
yeah.
Howell also
Well,
has that same perspective.
well, actually, that's where I got my information from. So, since you mentioned him, I'm going to give him full credit. It's all from Michael Howell. Okay,
Yeah.
so he nailed it. It's almost 100% match.
So
And
you're saying
I
you're
just
saying
I explained to you.
essentially you're saying
Yeah.
essentially that because they're coordinating or seemingly coordinating with the United States um, to not tighten the oil market further, and they're doing that by tightening liquidity, that's having a direct effect on the prices of gold and silver. And at some point, when we get to the other side of this war, if we get to the other side of this war and oil flows a little bit more free flowing and the market isn't as tight, then presumably China will open up the liquidity spigot a little bit more and we will see a change in gold and silver prices.
I agree, and that's my position. And if you read Michael Howell, that's how he interprets the situation as well.
Okay, that's interesting. All right, so
Yes.
on the demand side, though, for gold, have you seen any changes in the demand side for gold since the closure of the strait, or and even silver?
Well, absolutely. Every single time the price of gold and silver drops, China jacks up, the buying of gold and silver. So, I mean, I'm talking about the PBOC
Right.
officially on the gold side. And then on the silver side, I'm talking about, numbers that we can see from the SHFE, which is the Shanghai Futures Exchange, and the SGE, which is the Shanghai Gold Exchange. So every time there's a price drop, they seem to buy more.
They load the
That's
boat.
what I'm saying. They load both. So that's what I see. But I mean, there's a lot going on right now, Gary. I
Yeah.
can't tell people where the bottom is because I mean I don't have a crystal ball. But my track record, I have been pretty good at buying near the bottom. There's like in the last 5 years, there has only been one bottom really in 2023, and I bought massively there. But if you ask me where we are now, it's difficult to say because the fundamentals are so tied together with geopolitics now. I mean,
Well,
people say, look at the fundamentals, don't look at the what's going on geopolitically. I tell them, well, the geopolitics are part of the fundamentals.
yeah.
That's what we're talking about here, right?
Yeah.
Yeah.
Well, we're going to talk more about your predictions here
Yeah.
in a moment, but um,
Okay.
as you say, China continues to load up on gold. They're loading the boat on gold and silver right now. I think, yeah, how many million ounces was it? 800 million ounces of silver over the last, each month over the last couple of months that they've purchased, and um, massive amounts of gold each month, more than the previous month. But um, here's the thing I want to ask you, Eric. Some analysts say that gold is only for war, and
hmm
others say that gold is to strengthen currencies against debt and for net settlement of trade. What do you see as the purpose of gold, and why China continues to load up on it if war is not in their immediate future?
I'm Gary, you know me. I'm in the net settlement of trade camp, like the Luke Roman camp, essentially. Okay, that's where that's where I've placed myself. I mean, I think what China is doing, and Russia and some of these global South countries, they are essentially, buying all this gold to prepare for a parallel system that will be running alongside the US Treasury system. Okay, so while the entire world right now is still primarily using US Treasury bonds as collateral, I see that in the future, Russia, China, a lot of these global South countries will have an alternative system where it will be gold based. So they will be using a form of physical gold, maybe in the warrant format or a gold bond format, I don't know, but something that is tied to gold that would be their collateral, their reserve. Oh, I'm not saying that they'll give up the US Treasury bond, they'll have some of that, but they'll diversify into the gold based collateral.
Okay. All right, so let's stay on the US Treasury market for a moment. It has clear issues that have been discussed by so many people for quite some time. The amount of debt issuance that the US has to put forth moving forward, it's at unprecedented levels. And every major country that has been a purchaser of US Treasuries, a major purchaser, the top five countries, they seem to have some type of issue or challenge in terms of meeting the issuance, meaning they're either lowering their treasury reserves or they don't have the capacity because of internal problems like Japan for continuing that level of issuance, of purchase of the issuance. What is your read of the treasury market situation here that seems to be brewing? I mean, you know, annual two trillion plus deficits that need to be financed, $10 trillion in maturing, plus in maturing debt that has to be refinanced, interest rates that are higher, but not high enough for these countries to feel good about the ongoing purchasing power debasement that's happening of the US dollar. What's your read of the Treasury market situation and what could be coming?
Well, the US Treasury market is definitely dysfunctional. You just described it. And in terms of like what they can do to fix it, I mean, um, I heard, and of course I checked the numbers, it looks correct, that the Federal Reserve have recently pivoted and started, essentially QE again, buying US Treasury bonds. It makes sense because, like as you said, um, all those countries are net selling US Treasuries. So the Federal Reserve is buying, and entities at Luxembourg and Cayman Islands are buying. As you know, those are probably U.S. government proxies, or a lot of that is, right? So QE is happening, but the new Fed chair, Kevin Walsh, actually wants to reduce the size of the Fed balance sheet, like which means that he wants to actually quantitative tightening. He wants to sell U.S. Treasury bonds instead of buying
Or
U.S.
let them
Treasury
or let
bonds,
them roll off, right?
or let them roll over. How is that going to work when everybody is net selling? It's not going to work, right? So the way I see it is, you know, if they want to uh, hike rates and reduce the Fed balance sheet. By the way, I don't think they want to hike rates right now because Trump and the new Fed chair have said repeatedly that they want to cut rates. And the new Fed chair, Kevin Walsh, actually talked about how he wants to use a new way to measure inflation. Okay, so like call CPE with the top and bottom outliners cut off, which means like whatever they're looking at, for inflation wouldn't include the big swings, top and bottom.
It's another way to hide real
Correct.
inflation from people who aren't
Correct.
fully paying attention.
Correct. So I think in the short term, and maybe the medium term, like medium term meaning 6 months to 9 months, they either hold the rates where they are or cut, but they won't hike. But eventually they have to hike. And they want, and Kevin said that he wants to reduce the Fed balance sheet, okay, right off the back. So the only way I see them able to do that is to revalue the US Treasuries 8,133 metric tons of physical gold. Okay? That's the only way I see them able to do it. And if they do it at 4,000 US dollars per troy ounce, like revalue it to 4,000 US dollars per troy ounce from the current statutory price of the US Treasury gold at 42.22 US dollars per troy ounce, they get around $1 trillion from the Fed. All of that. That's how it works. They revalue, they issue, the equivalent value of the revalued gold, so, certificates to the Fed, and the Fed give them the dollar equivalent, which is around $1 trillion. And then after that, they can issue, you know, maybe $1 trillion worth of US Treasury gold bonds, as Judy Shelton have suggested. That's $2 trillion, Gary. Okay? So they can, like you said, once they have that $2 trillion, they can retire some US Treasury bonds, and they can do yield curve control. They can do whatever they want with that money. But I just don't think that, they would QE massively um, going forward. They just cannot do that. If they do that, I think the US Treasury market will lose whatever credibility that has left, and it will run into even bigger problems.
All right. So
Yeah.
I'm sure you've seen recently a video interview with Scott Bessent. He's kind of on a panel, and the Treasury Secretary, Scott Bessent. And he was essentially mocking gold bugs for believing that the government would revalue gold. And he instead
Mhm.
suggested that they're looking at other areas of the balance sheet to monetize, but that a gold reval is off the table. Did you happen to see that? And has that changed your perspective? And if not, why has that not changed your perspective?
Well, number one, he said it. He said we are not revaluing gold today. Like that was like year and 3 months or whatever ago. So, like he was very specific in his language. Yeah, he didn't revalue the U.S. Treasury gold that day. That's number one. Number two, I'm going to read you a quote, and it's from a famous German politician and general, Otto von Bismarck. Marshal, Grand Marshal Bismarck, right? Like he was the instrumental in creating the German Empire. He said, "Never believe anything in politics until it has been officially denied." So what have we got from Scott Bessent? He denied it. And there you have it.
Okay, so you're not um, you're not persuaded uh, by Treasury Secretary Bessent's verbal suggestion that there will be no gold reval. You actually still, despite that, maybe because of the math, there's just no alternative. This has to happen.
No, I believe him. He said that there would be no gold revaluation that day. And we are not on that day, like a year and a half ago, or whatever, right? So, and then the other thing is, I don't believe anything they say until they officially denied it, and they denied it. So there you
Okay.
have it.
Okay.
Yeah.
What do you
Yeah.
think the ultimate catalyst would be to cause the U.S. to reval gold for sure? Do we need to can it just happen, because the math is saying it has to happen and we're headed towards something, or do we have to have like a pain moment, like a calamity where maybe the treasury market is imploding and they take like an emergency action? What do you think the ultimate catalyst would be?
I think they'll just do it. I mean, like the catalyst may be the 250-year anniversary coming up on July 4th. They can announce it, and it takes some time for the actual implementation of it. I mean, Nixon, I think back when he did the second gold revaluation, they announced it in February of 1973, and Congress actually passed the law and implemented it at the end of the year. So, something similar can happen this time.
Okay.
Yeah.
And there was pretty substantial movement in the gold price between those two actions, correct?
Correct. Yes. You're correct. It went up, I think, more than 50% within 6 months.
Okay. And so
Yeah.
you would suspect that they make an announcement around July 4th, um, and then does Congress have to enact something in this reval
Yes.
process?
Yes. They
And
they they
then,
have to. Yes, but like, I mean, it can be done before the midterms. It's possible because things move a lot faster now versus back in the 70s, right? So they can announce it in July, and something can happen before the midterms. That's my timetable if it happens. And of course, I can be wrong, right? I can be completely wrong, and nothing happens on July 4th or July 6th. Actually, July 4th is actually, I think, Saturday. So if they do it, it will be July 6th. But like anyway, um, it I can be wrong, and it can happen later.
So there's still really,
Yeah,
really big bets of 10,000 and 20,000 gold price call options at the end of the
correct.
year. Um, as you saw, as you explained in 73, between the announcement and the enactment of the law, the gold price rose substantially. Something similar would likely happen once again, but this implies, a move of hundreds of percent, not 50%. What's your take on those gold price call options at the end of the year?
Very good, very good observation. If I'm a Trump insider and I'm doing, some hanky-panky insider trading stuff, I'm saying hypothetically, okay? I don't know. But if I am one of these people, and I know that gold is going to be US Treasury gold is going to be revalued from 42.22 US dollars per troy ounce to a mark-to-market price or something close to that. I would not buy physical gold, physical silver, or miners. I would put all my money in uh, gold call options, leveraged, because I'm an insider. I know what's going to happen. So I'll just leverage and buy gold call options. But I wouldn't go super crazy on it, like a couple $1 billion, because that will raise all the red flags with everybody. It's already kind of like raising eyebrows right now. Me and you are talking about it. But if these guys bought, let's say, $10 billion worth of call options, at 10,000 and 20,000 gold, everybody will be talking about it. So
So you think
that's my
there's
interpretation of that.
correlation? You think there's a correlation between those call options and um, your position, the likely reval of
Correct, correct.
gold
I like
sometime.
like I said, if I'm an insider, I would be buying call options.
And so
So that's the
that's who you think
correlation. Yes.
owns those call options is our insiders.
Yeah. I mean, like Donald Trump insiders, in the market every day. When the oil price go up and down, you see these huge positions going in. Right before Trump announcement, it's nothing. I mean, come on, it's nothing new. It's nothing.
Yeah,
Everybody's talking about that. We see that every day.
I agree.
So I'm not a bit surprised if this is happening in the gold market. That's all.
Okay. All right, Eric, silver, as we know, is in a 6-year supply deficit. Militaries, including the two biggest of the world, they're stocking up on silver because of the need for its modern military applications. AI and robotics, they equally need massive amounts of silver, if not even more than the military. They're all competing for the same silver. China has been purchasing record amounts of silver over the last few months. You mentioned it earlier. What are your expectations for silver? I mean, silver's been hit pretty hard.
I think silver is going to follow gold, Gary, meaning that I think silver is going to go up in price when gold goes up. But for now, I think what's happening is that China really, I don't know if you remember, but China was doing position size limits at the SHFE, which is the Shanghai Futures Exchange on silver. So I think, China is a huge silver industrial user, don't really want the price of silver to go straight up. But at the same time, as you said, silver, production worldwide is at a deficit right now. So this is just my guess, looking at the numbers here. I think what happened is after January, I think China struck the deal with the US, where China was allowed to import a lot of silver. You know, correct me if I'm wrong, but I think it's around 800 metric tons within a span of 3 to 4 months. And they're still importing. So China imported all that silver from the West. Um, whereas the West, led by the US, was allowed to restart their rare earth imports from China again, because China actually stopped that for many months in 2025. So these two events happened simultaneously. So I think that was like the exchange. Basically, China was allowed to import silver from the West, and the US was allowed by China to import rare earths from China.
Yeah. So are you expecting, obviously the market is tight. It has been tight for quite a while. Uh, so just to recap, you're expecting it to follow gold. So once liquidity in China begins to return, so really the catalyst here goes back to the Strait of Hormuz, the Iran war, putting that behind us globally, freeing up oil supplies to be free flowing again, which would allow China to open up their liquidity again without causing a major problem. Um, that would then in turn allow gold to rise, and then silver would follow gold.
Yes, I agree with that. That's essentially my thought process on the situation.
Okay. All right. GLD for the miners. GLD is 23% off its highs. SLV is 44% off its highs. January's blow off top, that was a sight to see, but that's in our rear view mirror. Will we see fresh highs anytime soon, or do you suspect that those were a multi-year top?
I don't think um, I don't think we're going to be at the bottom or dwell at these levels for multiple years. I mean, even if we do, that would be like the correction between 2021 to 2024, almost 3 years. It would be painful if that happens, but I don't expect that. Um, so if you ask me, let's say if we are building a bottom at these levels right now, the miners are still making a lot of money hand over fist, which means that, um, you know, theoretically, once the market realizes that gold and silver prices are not going down significantly anymore, the miners should bottom and rebound from these levels. So that's just, like me thinking out loud logically.
Yeah. So, short of a depression, Eric, a global wide depression, which it does not seem like we're headed for that. Um, the AI build out is going to continue full steam ahead. We've got a, competition for the pole position between the US and China. We have the US in a terrible debt situation, but then needing to invest trillions in infrastructure build out, energy build out, in order to be able to stay ahead of the AI advancements, in order to enable the AI advancements. Otherwise, they would lose ground to China. And that just doesn't seem to be an acceptable position. So what I'm saying is that you have the debt situation, you have the need for the US to take on more debt in order to fund the AI build out. Um, to me, that screams purchasing power of the dollar debasement, which screams gold. Um, at the same time, um, which would drag silver higher. But at the same time, uh, you have a situation where silver is so integrated into the need for the energy build out, the data center build out, the grid build out, et cetera. All the things that are needed require silver. And so you don't just have the dollar debasement coming because of the debt situation, but you also have the physical demand needs for silver. You've made a number of public predictions through the years that have turned out to be correct. What would you say, regarding all that for the miners? I mean, we're already in a 15-year drought in terms of capex and investment into the mining space. Many of these, many uh, of the metals are already in or nearing deficit, including silver. Um, what is your perspective in terms of as long as we don't have a depression, um, are you expecting the price pressures on the entire complex to basically be pushing, relentlessly higher here?
Gary, I wish I can say that, but like in the short term, it really depends on liquidity. If there's a US dollar liquidity squeeze, if the liquidity falls like falls through a cliff, let's say, the miners are going to get sold off. But in the medium to long term, I'm bullish. That's what I can tell your audience. I'm holding all my miners. I haven't sold any single one of my miners myself.
Okay. So right now it comes down to the unknown, what happens with liquidity, and
Correct.
we just don't know yet. Okay. Eric, what haven't we discussed today in this discussion that we should be as we consider what 2026 is going to bring us?
I think we covered all our bases, Gary. I think at this point, it's just a wait and see situation. The situation in the Middle East is changing, rapidly on a hour to hour basis. So it's just really wait and see what actually happens. If like this whole situation is de-escalating, or if it is escalating. I mean, even if you listen to the commentary out there from respectable people, it's pretty divided. I mean, there's a big gap. Like there's one group saying that it's de-escalating, and there's going to be a deal at some point, and there's another group saying that no, this thing is going to escalate, and eventually the U.S. is going to have boots on the ground in the Middle East, in Iran. So the way I see it is wait and see what happens. But from my personal perspective, I'm holding on to my gold, silver, and miners unless I see, you know, somehow the US is able to resolve its US Treasury dilemma at some point. So if they're able to, reverse that, okay, the situation in the US Treasury securities market,
That seems
unless
highly.
they can reverse that, yeah. So like unless they can reverse that, I will be holding on to my gold, silver, and miners.
Okay. This has been an
Yeah.
incredible discussion with Eric Yeung. Before we wrap up, I want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, If You Don't Own Gold, You Know Neither History Nor Economics. That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive. Now, I'm positive you've been enjoying the conversation Eric and I have been having. Please let them know. Hit the like and subscribe button and leave a comment below the video. Eric, as we wrap up here with our discussion for today, would you share a key takeaway to leave with the viewers, and then let everyone know how they could learn about you, your work, and connect with you?
So it's always scary, I think, if if some of your audience don't own any gold and silver, it's always never too late to start stacking. And the way to do it, in my humble opinion, is to dollar cost average. So buy, if you don't have a lot of funds, buy silver. Buy 10 ounces or 5 ounces every paycheck. So that's my recommendation to people um, who do not own any gold and silver right now. And people can find me on X at King Kong 9888.
Fantastic. I'll have the information up on the screen. Everybody who's tuning in, head over to the description area. You'll find a link. You can get over to Eric really quick. Track his work. He gives a lot of information out there. It's incredible, the voluminous amount of information that Eric puts out, and it's all worthwhile information for you to be taking in with regards to the precious metals and miners, and even uranium as well. Eric, thank you for coming on to Metals and Miners again. It's always so fun to spend the time with you and dissect all of this. You've been so generous again with your time and your ideas. I look forward to having you back on sometime soon. And everybody else who's tuning in, thanks for watching.
Thank you, Gary.
Interested in the metals and mining sector, to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive.